installments. This is well, I just said, you have to pay your tax bill all at one time. There is another exception to that, and this is an installment payment plan. Property owners have the ability to register and prepay their real estate taxes in 4 quarterly installments. And right now we're taking applications for 2015 year taxes that will be billed in November of this year. So the deadline for that is May the 1st. So if someone turns in an application, we'll send them a quarterly tax bill for 2015 taxes this June. And that's the first installment. And basically, it's a quarter of their prior year's taxes. Plus, they have a discount of 6% that's applied. So if you want to be on the installment plan, we'll send you this first installment in June. You pay that. You're on the installment plan. And then you would get a second bill from us in September for another quarter of the prior year's taxes. And why we base it off prior years, because in June and September we don't know what your taxes yet, because we don't get that information until October. So we have to base it off the last year's taxes. So it's the next quarter of your taxes from the prior year plus a 4.5% discount. And they get a bill. It looks a little different than that one I showed you earlier, but all property owners that are signed up for this plan get that. They get a bill so they know when it's due and when they need to pay it. In December, we send out the third installment tax bill. And at this time, we know what your taxes are for the current year because we've gotten that information back in October. So it's a quarter of your taxes plus 1/2 of any adjustment. So if your taxes went up $100, 50 of that would be tacked onto this. If they went down, we'll make the adjustment down. So that's how that third installment works out. And then you get a 3% discount, which correlates with the annual tax bill as well, the 3% in December. And then your final bill would come to you in March, and that's also 1/4 of your taxes plus 1/2 of any of the adjustment that needed to be made. We have about, I don't know how many accounts to be honest, I think around 2,000 accounts roughly that are on the installment plan. So it's not a lot of people take advantage of it. We try to push it more so you don't have that burden of paying that one lump sum in November or during, our bills come out bad timing with Christmas and all that. So, but in order to be on this plan, you can't be escrowed. So you can't, your payments, your taxes can't be escrowed. And your taxes have to at least be $100 a year, which most people's are, but there's a few that aren't. Another important aspect of installments, if you get that June installment bill and you do not pay it, your account is removed from the plan completely and you revert back to just getting your bill in November. So we urge, if you want to stay on the plan, please make that first installment payment. However, say you make the June, you miss September, the September bill then just carries over and gets added to your December bill. These things, just like the annual tax bill, after March 31st, they go delinquent. Whatever portion, say you've paid 3 out of the 4, that fourth portion that's left, we'd sell a certificate on that if it's not paid. So we use the same procedure to collect on these. Tax deeds are, touched on this briefly with certificates. Once a tax bill is delinquent for 2 years, a certificate holder could then file a tax deed application, and that's property is actually going up for sale at that point. Just for an example, 2013 year taxes we billed in November 13, they went delinquent April 1st of 2014. So April 1st of 2016, that property is then in danger of having a tax deed application if those 13-year taxes weren't paid. I know that looks like a 3-year window, but it's just how we bill at the end of the year. Any account that has a tax deed application on it will also have big red letters and a flag. Certified funds have to be made for payment on that because we are going to be pulling that account. We're going to be notifying the clerk of court, do not sell this property. So if we want to avoid someone writing us a bad check the morning of the sale for us just to pull it from being sold. So certified funds are required for redemption on these. You guys want to actually post payments on these. If you have an account with this on it, again, go to your supervisor or manager they'll call us to confirm the correct amount that's currently due, and they'll post that payment, your manager or supervisor. Kind of a sequence of events on tax deed applications. The application is made by the certificate holder. So April 1st of 2016, we won't just initiate the process on our own. A certificate holder has to contact us to initiate the process. So they might not do it that day. They might wait months or years. They have basically 5 years left on that certificate to wait or file an application. So once the application is made by the certificate holder, our office contracts out a title search to be done on that property to find anyone that has interest in that property or liens against it. And then we supply that information to the clerk of the court because they're responsible for sending out certified mail, running advertisement in the paper, and also setting the sale date on that property. So we're responsible for telling them who to contact, and they're responsible for contacting them. Then the sale date set by the clerk of court. Clerk of court notices all the parties that are listed on our title search or ownership and encumbrance report, and then they conduct the sale. They're still done in person in the Crestview Courthouse. So they'll show up, have 10 people in the room, and start the bidding. And they start the bidding at whatever is due back to that certificate holder or the applicant who made application. So they're guaranteed to at least get their money back off that property. And you know, you guys don't really have to notice, but if no one bids on that certificate, on that tax deed, whoever made the application for the tax deed then gets awarded ownership. So certificate holders kind of have to, you know, measure the risk or reward. If they file a tax deed application, they pretty much have to be prepared that they might own that piece of property. So that stems all the way back to whenever you're looking to actually buy a certificate. You could own it down the road, even if you don't want it. So that's why people tend to shy away from those landlocked or swampland properties, because you know, they could put a lot of money into getting it to go through this whole process and then wind up owning it, and they don't really want it. And the tax deed is issued to the highest bidder. If a property starts at $10,000 and it gets sold for $100,000, $10,000 of that goes back to the applicant, and the rest the clerk of court sends back to anybody that's got liens on the property, or if there's no liens, they send those funds to the property owner. So property owner could get some money back out of the deal, but they lose their property, and it's not guaranteed by any means.